Hey guys, All in Crypto here, and welcome back, ladies and gentlemen, for another YouTube video. Hopefully, you've all had a smashing Saturday. This video, like the title reads, is going to be about getting you guys ready for the next crypto crash. And it's not just crypto that's going to crash, in my opinion. It's going to be the stock market. In fact, the stock market's largely going to lead it. You're even going to see things like gold. There's going to be a sell-off across the board, basically, and it has everything to do with what is currently going on with the Federal Reserve and central banks around the world continuing to clamp down on liquidity. Now, we are potentially seeing the early signs of perhaps a pivot as we see the likes of the Bank of England have to step in and kind of, even though they're doing quantitative tightening, do a little bit of quantitative easing to prop up the bond market, the 10-year and 30-year and 20-year gilts. We are probably, if something similar happened with the US stock market, it's likely they would take a similar route and actually have to turn that printer back on. And you guys know that we are investors based upon liquidity. It is a liquidity game, ladies and gentlemen, and failing to understand this very simple yet vital concept is the difference between a good investor and a bad investor, and an active investor and a not active investor that just plumps his money into something and hopes that it goes up forever. There are always opportunities in markets. Markets essentially are potential. I know that from a day trading point of view. Not trading today, by the way, for anybody that's interested in what we do trading wise. We have finished the week in the green, which is good. A green week is always a good week. And Saturday, in my opinion, really just is not worth trading. Sunday night is when we're likely jumping back into markets. But what we're going to do in this one is really prepare you for the next crypto crash. And by crash, you guys know we've got this head and shoulders target that takes us to around about 13,800. We are saying that potentially there is, if the dollar decides to take a bit of a rest here, and we're going to be looking at the stock market, we're going to be looking at the S&P, and we're going to be overlaying 2008's roadmap over today. You guys know, and we've been saying this for the longest, or certainly a lot longer than everybody else has, that we think we are heading into a recessionary period. We called for being in a recession a while ago. We said the data has just got to catch up, and we think you're entering a 2008 style period. Now, this throws crypto into a murky water or a kind of volatile seas because it's never had to experience this before. It's been born in an era where the Fed, where central banks were essentially proliferating upon proliferating. And in actual fact, that was the whole reason Bitcoin was created, to be a harbor for getting away from these nasty controlled fiat systems that manipulate all our lives and that we are a slave to. And yes, that is correct, ladies and gentlemen. You and I are slaves to the fiat systems around the world. Whether you think you're not, that is debatable. But it is finance that controls your life. Try and not go to work next week. It's all you need to know. And some people are fortunate enough to not have that, but they have other burdens that they have to achieve. It's only a very small amount, the ruling class, if you will, that get the privileges of not having to be sort of bound to this financial slavery. And whether you like Margaret Thatcher or not, and I am non-biased, I don't tend to take a biased political approach because I think all politics is corrupt, certainly in the UK and the West. Unbelievably corrupt. It's one rule for them and another rule for us. But she was famously quoted as saying, "How can you be free if not financially?" And I do very much believe that. And that's one thing that we try and do on this channel is promote financial education. We are crypto eccentric, but we do look at markets generally to help you guys maybe gain a little bit of freedom within your lives. So we do think that the next leg lower is coming. And essentially right now, we'll get a fresh chart. You are doing the exact, and we'll overlay, we'll take a look at 2008. We'll also get into a little bit of the news. History doesn't repeat itself, but it freaking rhymes. The Fed is hiking further and faster than any time in modern history. So they have to almost do this. What we tend to find as the velocity of money gets greater and greater, the volume of money gets greater and greater, is the swings that we get in economic cycles get more severe and more severe. The prior crashes typically not as bad as the one that we're going into, and we can see this in regards to what the Fed is doing and just how aggressive they are big. I actually didn't think they'd get much past 2.5%. But really, since they started upping interest rates, remember we were out of Bitcoin at 44K and have largely sat in the dollar, even though I'm in the UK. You know, it's just a bad situation for markets that are dependent on a flow of money. And certainly something like crypto, that even though it was created to be a hedge or a lifeboat from fiat systems, it's very much acted in sync with the stock market and the risk on asset section, which is totally driven by liquidity. But right now, and we're going to look at 2008 on the S&P, you are, remember we'd drawn this falling wedge, we've called this very, very accurately, guys. We don't always do it. We got how this year started wrong. We actually thought, and we're somewhat believers in the extended cycle theory. However, you know, we quickly changed our bias based on the price action that we were seeing. But you're forming a base here. And we're going to talk about this base. Because, you know, when you're looking at charts, people just, they don't really get what's going on here. But really what's happening is they're telling a story. They're showing you sentiment. So you don't need a Twitter poll to show you sentiment. Look at the charts and look at what's happening. And you're doing the same thing here that you did over here and that you did over here. And in actual fact, you're doing the same thing here that you did. Let's get this on a weekly chart to give us a little bit more room. Oh, a little bit more room here. Can you see how we're forming a base? So we're building liquidity up here. So you'll have lots and lots of stops here, and people will essentially bid this. Traders love to bid lows, including myself. If you're going to take a trade, you don't want to take it in a midpoint. You want to take it down here or here and bet that it's going down or bet that it's going up. Okay? So you're forming liquidity here, and you're rallying off of it. Now, the issues with these rallies, certainly if you look at here, this is textbook. I mean, this was a descending triangle if ever I've seen one. Is that essentially, here is a beautiful example of volatility reducing and the buy pressure decreasing. Eventually, buyers run out and the sell pressure overwhelms. And that's why you have this big spill to the downside. I think something like this is on the horizon for Bitcoin. I still think we're going to shed 20%-ish off its current price. So we are looking at 15K, 16K. You know, we're going to deal with the numbers as we get down there. And then once we get to potentially sub 14K, we'll look and we'll assess the situation. We may dip our toes back into the markets. But until we get to where we need to go, or I think we're going, and maybe we don't get there and we totally renege and do something different and we put in this sort of double bottom and then we'll flip our bias again. But we're keeping on with this downtrend. So I think this is very similar to what you're doing here. Now, what you're gonna say to me, and it's a very valiant argument, is okay. Well, you know, here for example, in terms of buy pressure, the move was greater than this one and this one, but the issue is you still get capped. So yeah, there's buy pressure here, and you've got bids here. Bearing in mind, we were out here, by the way, guys. You know, and we called this perfectly. We called this. And we're now calling for a similar sort of repeat. The issue is you get capped. So you get bids off here. You form this kind of base. And then eventually what you'll get is you'll get a whittling away of the buy pressure. And once you smash into these stop losses that are very tightly placed, people almost that bid here don't even care if they get stopped because it's a very small loss to take. The buyers give in and the sell pressure takes over. So let me remove some of these lines on the chart because it's getting very messy now. Let's focus on the next spill. You can see a similar thing took place here. You have these big wicks and people bid them up. You'll also see that volume, typically, and this is something that I'll teach you guys as well. You know, my aim is to become a chart technician. That's what I like to do. You know, I like to look at charts. By the way, quick word of warning, don't look at Binance's volume because they offered free Bitcoin spot trading. So I get so many people go, because what we want is if you're range bound at maybe a low and you see a huge amount of volume and actually an increase in volume, that can go, you know, there's two things that are happening there. You know, people are accumulating positions, and often what you'll find is that maybe institutions or something are actually buying and hiding their orders in the sell pressure. But if you look at other exchanges, sell pressure doesn't add up. Remember, guys, this is something that we've been looking at for 5 years. And on YouTube publicly for 3 is our Bitcoin 4-year cycle theory, which has it gone out the window? This is maybe worth revising and doing a video on. But you can see here, again, you're forming this base. bid up on the low, bid up on the low, bid up on the low. You have people putting stops just below here. And you can see this in the candle. You got bid here just before the fall, just like you got bid here, but then you get the stops run, and then you get the capitulation take place as the buy pressure gets flushed out and they close. This is happening again here. So you can see bid, bid, big bid, but not coming back and actually invalidating a broader downtrend. And if we look at the weekly and we look at our indicators, we don't want to look at the demand index, although if this crosses on the weekly, then potentially we'd be interested in buying. This is a very much intact downtrend. And really, you know, this was your signal to get the hell out of the markets, was when you made this deviation on, you made 69k with your RSI significantly low. So really since here, look at this downtrend. There's no bullish divergent. Perhaps you could maybe say, you know, here we put in a low, and then we actually put in a new weekly low, but we put in a high low on here. So we have said there is definitely the possibility for potentially a move. Maybe this gets bid up. Remember, we're in this liquidity zone, so maybe people take the long here like they have previously, and we need to go up before we then come down, and then we would potentially be completing what we're calling our second peak, and we're making that head and shoulders symmetrical, and then we get the spill. I think this plays out. I've seen nobody call for this head and shoulders, by the way, guys. And people say, oh, well, head and shoulders only occur at the top of a trend or the bottom. They do indeed, and they are very prominent trend-based reversal signals. You know, they can very accurately call tops and very accurately call bottoms in relation to them being inverted. But they can also occur in the middle of a trend. You know, if you see a pullback, if you see a rest period, you know, this is really very much a range-bound environment. However, I do believe you're sick of this head and shoulder. So back to what we're talking about, and then we're going to dive into the S&P. You're doing the exact same thing here. And we think this is a head and shoulders, so this is a perfect structure. See big amounts of volume here. What exchange is this? KuCoin. Anyway, you're seeing bid, 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 bid. But what you'll notice is look at all the indecision here. Look at these candles. So maybe you get a push. Now you're holding this box. Maybe you get a bit more of an extension to the upside. Remember, if the dollar decides that it wants to pull back, you know, we're looking at Bitcoin US dollar. We did say running into 2001's levels, you are going to get a pullback. This is a trader's dream in terms of looking for shorts, because this is significant. Now, my scenario for the dollar, which is going to cause this next leg low, is it runs in and potentially puts in a double top, and then maybe it falls and maybe things pivot potentially. But if you look at gold, gold looks like shit to me. You're putting a double top here for gold. This is going to roll. What happens to crypto if gold rolls and the stock market rolls? And we'll get onto the stock market once I've finished looking at this immediate structure. This, in my opinion, it doesn't have to, but in my opinion, this is just waiting to roll, and we're just stalling. And once that liquidity gets swept down here, boy, you're falling. And the real issue here is, and we've done this for you time and time again, looking at levels. Okay, you're holding here. It's natural you're going to hold this level because you have price action here. The problem then is where's your next price action? And this actually ties in with our head and shoulders, actually, guys, and the target that we've got for it. You know, this is what you're looking at. We look on the weekly. You've got gaps here. We just essentially went straight up. We didn't really validate. You had a bit of a stall here, but we just went straight up. Maybe you come in and fill some of this, and Bitcoin ends up doing something similar. You know, we do something like this, and we bounce, and then we range bound, and then they start turning the tap on again, and we end up looking like, you know, like we did over here. Potentially that's a scenario, but we'll keep you up to date on it. Obviously, my Patreon members are going to get what I'm buying, where I'm buying, you know, when I enter, when I don't, and so on and so forth. But you're very much, I hope you guys can see the point that I'm making here. You're setting this up. This has not shown enough strength for us to renege. The people calling for this as a bottom are hoping and dreaming, praying. They were you know, hoping, and by the way, just to make this point, we've actually put in a new weekly close. We've also put in a new daily close. So they were wrong on all accounts. They were wrong here. They were wrong here, and so on and so forth. But they can get away with it because, you know, anyway, neither here nor here. I'm no angel. I've made wrong calls as well. Nobody's going to get the market 100% right. But we do think this is setting up for the next spill. And the real question for me is, do we see that run up? And we have taken longs. We took the longs yesterday. Do we see that run up before we see that next spill to the downside? Once you lose this and you take all this liquidity out and those stops get hit, ain't nobody bidding this up. But at the same time, no one's really wanting to sell until we see that confirmation that we are going lower under sort of 20k. Sellers don't really want the smoke. I personally, you know, don't really want the smoke until I get something that says, okay, now we're going. Now, maybe that comes in the form of a stock market roll. You know, we've been calling, by the way, we were bearish on the S&P round about this line in this break. Yeah. And one thing that I really want to highlight, just how perfectly you follow in 2008. I mean, it's scary, to be honest. Look at this. So let's go high, high. What are we doing here? Can you see this? And now it's really spilling. It's spilling in this kind of a manner. So maybe it gets a slight bid here, but maybe we do something like this. And we sort of go into this recessionary period that we're in. Remember, this is all on the back of the Fed taking liquidity out of markets after injecting them and kind of, you know, creating that crack addict and then making it go cold turkey. Creating that heroin addict and then going, right, no more heroin for you. That person's going to be in a lot of pain for or emotional, you know, physical discomfort for a period of time. And that's markets. Good analogy to make, actually, although probably not a very politically correct one. But I really don't care. So now I don't think you're going to run your March 2020 lows, but I can certainly see 3,000 or 3.1 or something like that coming back to this sort of period here. That's still a long way to go. You are going to get resistance here or support here. And this is maybe the catalyst, although we have seen crypto see some valiant strength whilst we've seen stocks capitulate. But I believe that that's because we're at this key level. And I don't think people want to short until they've got reason to do so. I don't think people take the short here because it doesn't weigh up on risk to reward unless you swing trade and you're building up positions over time, which we are going to be doing. So it's going to be very, very interesting. It's really just preparing you for what I think is to come. This was something I found interesting. The collapse in Credit Suisse shares price is of great concern from $14.19 in February 2021 to $3.90. Currently, markets are saying it's insolvent and probably bust. There's lots and lots going on, guys, that makes me very uneasy outside the cryptocurrency market that will have contagion within crypto. Why will it affect our market? Well, markets are all driven from the same things: money. I believe that blockchain and crypto is a tech revolution. But the price don't care because the price is driven on people buying and selling. And when people need money to make their bills, when people need money to you know, have to make their mortgage payments, or when companies need to repay their debts and stuff like this, there's a flight to money. And there's also a flight to yield, which is why we've seen the pound and we've seen the dollar kill off other currencies in terms of strength. And remember, we've been sat in dollars, which seems strange, you know, a matter of months ago, because everyone's going, well, you live in the UK, surely there can't be that much volatility. Well, you'd have lost like 20% of your value plus. And today, if you had just been sat in pounds over the dollars. And the thing is, with stable coins, it's brilliant, really, and I see stable coins playing a huge role in the future, is you can actually, you know, very easily access dollars now, whereas before, I mean, I've tried it, it's a pain in the ass. You get really bad rates for swapping from the Great British Pound to if you go and do it sort of through maybe like a travel agent or something like that, or you try and set up an international bank account, which is pretty costly. A little bit of crypto news. Ethereum killer. Solana suffers another major outage. Now, I'm going to be buying cryptos that you guys would not expect, given some, you know, I think decentralization is crucial. I believe in it. I don't think everything needs to be decentralized, though. But I know something that's been not very well built, and that is Solana. We don't see these kind of outages and halts in the network on really any other major smart contract layer 1 blockchain. It's really just Solana. And I think Solana has been pushed and poster boyed by your VCs to the masses, even though there's huge amount. I mean, the majority is VC owned in terms of the supply, and they just dumped on you, used you. And I won't have any part in that, so I don't even think I'll be buying Solana in the bear market. I think I'll target other coins, and they don't even have to be decentralized. So the likes of BNB, I'd rather have over Solana. At least they've worked. People sleep on BNB, by the way, guys. We're going to be doing a lot more commentary on that. DeFi needs appropriate regulation before moving to a retail, says Fed Chair. Finance redefined. This is coming. So we are going to see crypto integrate with retail and the kind of real world. It's a matter of time, guys. And this is a good sign of that. And actually, regulations are going to be the next evolution in that and really propel retail adoption. I have rambled on for way too long, guys. You guys know what's coming. Doesn't have to. Just my bias, and hopefully I've given a good enough argument and been giving good enough arguments since 44K. If you're not already subscribed, guys, hit that subscribe button. We'll keep you right. We'll give you honest news. At the end of the day, I have freedom to say what I want on here because it doesn't matter to me whether I upset. Of course, my aims are definitely not to upset anybody, and certainly if you still hold crypto, it's more that I want to be honest and give you guys an honest take that I have on markets, whereas many of the channels out there cannot do that because they are solely reliant on their income from views on YouTube. It's why they have to continue to promote a bullish narrative, even though they've continuously been wrong. On that point, we are exceptionally bullish on the crypto space long term. We just think that short term, we've got to get through this liquidity destruction that is affecting all markets. Remember, it's not just crypto. I think it's going to sell off and doesn't really reflect on how revolutionary the crypto space is. It's all markets. All I've got for you guys, you enjoyed the content, like, so I appreciate it. So as a comment, and I'll see you all in the next YouTube video. Thanks a lot for watching, ladies and gents.